The first step to any successful trading, whether it is swing trading or day trading, is successful top-down analysis. Top-down analysis is the process of starting on the high time frames and then moving down gradually to the low time frames to formulate a trade, work out directions, and then actually make an execution. Top-down analysis follows all of the methods we've spoken about so far, starting with structure, market efficiency, supply and demand, liquidity, everything we've covered so far, but put into a systematic approach that we first start on the high time frames like the weekly, that for a swing trading approach or a high time frame approach, we start out on the weekly and daily time frames and then scale all the way down through the 4-hour, 1 hour, and then potentially into the 15-minute or 5-minute charts to actually execute a trade. So by actually starting on those high time frames, we can get a clear picture of what the larger time frame view of the market is. And then by scaling down to the lower time frames, we can actually get better executions with tighter stop losses and bigger targets. So I'm going to show you the top-down process here on GBP JPY. And first of all, as it's a high time frame trade, the system suggests that we start on the weekly time frame. Now, the start of the top-down analysis normally happens on a weekend for me, and I would advise you do the same. This is when I look at the weekly charts and work out where I think the markets are going to go. Looking at the weekly gives us a quick idea of where the markets could head in the week ahead, whether they're going to go up, whether they're going to go down on an immediate basis. And it also tells us what the trend is for the long term. So looking at GBP JPY then on the weekly time frame, we can begin by looking at liquidity and supply and demand and the range and the structure to work out whether we are likely to move up or likely to move down. So what I can initially see here on the weekly time frame is that we are in this large trading range. We have the low of the range in here, which has been recently retested, and the high of the range is up here. We can see that the price has traded generally between this range for quite some time, all the way back from 2016. So we don't need to use really far back price action because that is not going to tell us too much, because we are looking for the immediate moves of what is likely to happen in the next week or what is likely to happen in the next few days or potentially up to a month. So we only need to really focus on what is currently happening. Obviously, we can actually see on the weekly some high interest demand and supply areas that could come in handy to working out where we are in the market. So I'm going to scale out and just quickly look at the weekly here. Well, we can see on the weekly time frame we are essentially in a downtrend. We have a lower low coming in this area. Then we have this lower high, which respected this supply area. Then we sold off again. We are yet to actually make a new lower low, but we could suggest that the market is likely to continue moving down. Now we can see the market has actually filled in most of this imbalanced price area. What we could do here is actually grab our parallel channel tool and mark out the imbalanced demand zones on this chart. So there's a little doji candle down here that I can see. There's also one just above which has been lightly tested by a wick. And this is actually an area that has just been retested on the current time frame. If we look over here, we can see that it just got tapped in there, but we've had a full retest with this wick here. So we've seen a demand zone be retested, and then we've seen the market begin to push up. So we could focus on this and think, okay, the market may be in a downtrend, but is there any upside space that the market needs to fill since we've respected this demand zone and actually, if we look at the structure, started to move in this bullish fashion? So we have the low in here, we have a higher high, we have a higher low, we have another higher high. This kind of suggests to us that we could begin moving into a bit of bullish movement in the near term. Now we can see that we have an imbalance here as well, which will lead us into this supply zone here on the weekly time frame. So by looking at the weekly, all we're doing really is looking for areas where the market is likely to react from and areas the market is likely to move into. We can see we're in a downtrend overall, continuing to make lower lows and lower highs on here on the smaller time frame view, and overall as well on that larger time frame view where we saw lower low, lower high, and we could potentially come in for a lower high or a lower low. So we don't need to worry about the overall weekly trend. We just need to know we've reacted nicely from there, and now we can focus on just this area because we're only looking for immediate moves, and every single one of these candles shows a week of price action. So we would really only want to see what is going on within this current structure, and the current structure that I'm focused on here is this area because we've seen a demand zone retest, we've seen the market potentially shift into this uptrending movement, and we can see that we have imbalance which needs to be filled into a supply zone. So this is the method carried out on the highest time frame. And what can we gather from this? Well, we can gather from this that seeing this demand zone here and the fact that we are now forming these higher highs and higher lows, the market could indeed actually make a bullish move from this demand zone to fill the imbalance. Does that mean I think the market is in a long-term uptrend? No, it's very possible that we hit this area and then we sell off. But we have that imbalance space, always remembering we can use imbalance for very clear targets. And even if we are moving in a downtrend, on the higher time frame, we will at least want to see this weekly zone fulfilled before we start going short and before we start selling the market. So now we have a clear picture of the weekly, we can drop it to the daily time frame and see what the daily is telling us here. Now what I can see on the daily is that we had that low come in, higher high, higher low, and then we've had another higher high. We have a demand zone just here. We could actually see this as a retested demand zone. We may want to focus on this kind of area. And we also may want to look a little bit at this area just here. Because if we look at this zone, it has also been retested with this candle, which just wicked into it. So this is the real imbalanced area, as we can see imbalance there, which is now being filled. So this tells us then that if the market does begin to make some bullish structure from where we currently are, we may indeed begin seeing this move into an uptrend, and we may be able to get an entry. So from here, what we would like to do is move once again to the lower time frames like the 4 hour and the 1 hour to see what is going on right now. Going to the 4 hour, we could actually refine the zone that we focused on to this area down here, because this is the final imbalanced area. There may also be a little bit of an area of interest we want to focus on here, but don't get too muddled. We saw that the zone was the last imbalanced zone on these higher time frames, meaning that there has been a fulfillment, even if there hasn't been just here on that very low time frame. So we will remain with our focus on this area, but we can also keep in mind that if we do dip down and then begin making some bullish structure from there, that trade would also remain quite valid. So the current structure here on the 4 hour is telling me that we have this as the most previous lower high. So we've got obviously lower low, lower high, lower low, lower high, lower low, which has retested this zone. It now looks like some strength is coming into the market, and if it does continue to come into the market and we push over this high, as it looks like we're doing now, we could look towards an entry somewhere within this price action. So I'm going to go to the hourly time frame now and see what that is telling me. Here on the hourly, we can see that we've broken the structure and the market has left open a few imbalanced zones below. So we could look towards this zone and say, if we get confirmation come into the market there, we could buy, right? This is the final zone that broke structure. If we drop it to the 30 just to get a clearer picture, because I believe there's going to be some imbalanced demand areas here, we could also draw some attention towards this kind of area that we have. And we can also see there is a extreme imbalanced demand zone at the bottom. So I'm going to mark that off by just collecting all of these candles there, just to make sure we have the full range. And then we can basically say, right, if the market comes into one of these areas, we could actually look for confirmations and we could look for an opportunity to buy. So we wait for the market to come in, and then we want to see some confirmation. We saw the market come in here. This is where you may be looking to go to the even lower time frames for a confirmation trade. But if you are just sticking to those higher time frames, that is also completely fine. Now that we've seen a wick in, we could potentially look for a pullback into this range to actually look for some form of buying opportunity. So if we drop it to the 15-minute, for example, we could look at this zone for a buy being the last imbalanced demand zone before we had this push up. So we had push up, retest of this zone here, and then we've had another push up with another higher high, and now we have a clear demand zone that we can actually target from. So this is where moving to the lower time frames comes in handy, because here we can see that this zone actually came in and tapped an area here, but the real demand zone, the refined demand zone here on the 15-minute, is down here in the low. Now the next video after this one is going to be talking about refining zones, but basically the concept is if we mark out an hourly zone and then we drop down to the 15-minute, there's going to be a smaller 15-minute zone within that, and if that hasn't really been retested, it's very possible that the market is going to come and retest that. So even though we have this zone which has broken structure, I can see some clear imbalance in this area. And for that reason, I'm not going to be really looking to execute here unless we get a confirmation on those even lower time frames like this, okay? So the standard reversal trade that we spoke about. So now letting the market do its thing, we'll see if it comes into there. Is it going to give us confirmation? Well, as we see, it didn't give us confirmation. It has now pushed through, hit that 15-minute zone, and this is where we could begin looking for some buys. So you would either be in with a risk entry, or you could go for a confirmation entry, where obviously we now have that retest, push up, push down, push up, and as we can see, this small structure point was broken with this push up. So we could look towards this area on the 15-minute time frame for a potential buy. And it's around this point that you could go ahead and safely set an order. You've done the top-down analysis all the way from the weekly to where we are now, and we can actually see that the price action is suggesting that we could now begin moving to the upside. So what we can actually see here is a floor of equal lows. So bringing the liquidity concept into things, we've actually seen that this area is a little bit of an equal low floor, And there's also obviously an imbalance just into there where we've now come and traded into. So this position is now triggered and we are moving. And the idea behind the positions is that we just hold them and we manage them well by obviously managing stop losses and things like that, which we'll learn about later in this chapter. And that is going to help us avoid losses when the trades don't work out for us. So with a managed stop, you'd most likely have been break even on this trade, or if you were holding the risk, we still haven't really pushed through the low of that zone, so you'd have been good to go. Now by this point, we made a higher high, so this would have been a managed position. So we would have actually been out of this trade at break even now, which is a good thing, and it's something we're obviously going to learn, so you will see that. But for now, just keep focusing on the top-down process, how we've brought this from the top to the bottom timeframes. And what we can actually do is push our focus towards this extreme zone now, because we are obviously coming and trading deeper into the zone. But we have formed a new higher high. We do have imbalance and we do have a demand zone. So we can keep this on like so, this extreme zone. And we can even go ahead and place an order in the area that this zone is set. So for this example, let's drop our order on the extreme zone. Now extreme zones, which are these zones at the bottom or top of movement, the very last zone, they are the best ones to put orders on. If you put an order on an extreme zone, chances are you're going to be all good when it gets tapped in. It's much more high probability than it is to actually put an order on a middle zone like this, because the thing is we can actually come down and trade into this one. So if we're entering up here, there's still a big chance we can come and trade into here. If we do trade all the way into here, the only way we're going to lose is if the trend breaks and shifts back into a downtrend, which occasionally will happen, but much less often than with the other kind of trades. So we can see the market comes down, trades into our demand zone there, and then begins making a large move to the upside. And what we can do is actually use the high time frame work to work out our targets. Now, we obviously know that our target for this trade was going to be all the way into this point here. So let's just say we're holding it out for that long. Obviously, this is going to be monstrous risk reward. And at a trade this size, you would be trailing aggressively, or you would even take some partials on the movement. But we can see that that clear target refined with a low time frame demand zone entry brings some brilliant profits. And if I just move it up to the high time frames and let it roll now, obviously stop managing would also be in play. So you may get stopped out early on some of these movements. You may also secure partials on the way, meaning when you get to the end, you're not actually holding a 40R sized move. But these are the possibilities, and this is the potential of the strategy that you are learning and the strategy that we use. The top-down analysis process, as you can see, not only gives us the direction for trades, but allows us to get super scaled entries so that we can hold trades for a long time like this. So as you can see, the target was there fulfilled. And yes, believe it or not, that would have been a 48R movement, which is an insane amount of profit from a single movement, just from a weekly zone to a weekly zone. Now, obviously, this trade would have taken you a long time to hold out. I know most people don't have that patience, but I'm just highlighting to you the potential of. So it is a 2-month trade. And I know that most people won't have the patience to hold out that long, but I'm just showing you the potential of the strategy that we're using. Now, in one single week, the profits would have been from here all the way up to here, bringing us about a 12R move. So even if you were just holding a trade for a week, you're still looking at around 12R profit on that movement right there. And that is the potential of the trades. And obviously we can then scale in because we know the direction from the high time frames, and we can just continue to ride that trend up through our high time frame zones. And that is the top-down analysis process. Now, you haven't really learned how to put things on the charts yet. So this is kind of an introduction to the process we're going to be using. And then after this, we're going to go ahead and refine. I'm going to show you how to formulate setups, how to position stop losses, how to find clear targets, how to manage trades, and all of that stuff after this. But this is the first starting point, understanding the top-down approach and how we start on those high time frames like the weekly, and then move down from the weekly when we have the direction plan to the daily, the 4-hour, the 1-hour, the 30-minute, and so on, to actually find refined entries with very tight stops and very big risk reward potential. So I hope this has been a useful introduction to top-down analysis trading, and I'm looking forward to teaching you some more stuff over the next few videos so that we can start to apply this to real markets.